Warren Buffett sold $133 billion worth of stocks. Not during a crash, not during a panic, but while the markets are riding high. That alone should make you stop and ask, what does Warren Buffett see coming that the rest of us don't? Because when Buffett moves, it's not random, it's not emotional, it's calculated, and it's often a prelude to something big. Buffett is the guy who runs into burning buildings on Wall Street, not away from them. Remember 2008? He was buying while everyone else was running scared. Back then, he wrote, "Be fearful when others are greedy and greedy when others are fearful." He poured billions into companies on the brink, betting not just on their survival, but their eventual dominance. And that bet paid off. And yet now, while the market is euphoric, he's not buying, he's selling. A lot. Therefore, we have to ask ourselves, why now? Right now, in early 2025, Berkshire Hathaway's cash pile has hit a record $348 billion. That's more cash than the entire market cap of Coca-Cola. And this isn't about needing cash for a big acquisition. Buffett has said those are hard to find. In fact, he's lamented in his letters to shareholders that the market is overcrowded, overpriced, and overflowing with speculation. He's even compared modern investing to casino behavior, driven more by emotion than fundamentals. So, what is this really about? What signal is Buffett sending? The economy looks strong on the surface. Unemployment is low. Stocks have rebounded from the chaos of 2022. Retail investors are back in, and tech stocks are flying high. Wall Street is optimistic, and some analysts are even calling for a new bull run. But scratch beneath the surface and the cracks begin to show. Interest rates remain high, squeezing consumer spending. Inflation is proving to be stickier than the Fed would like. Global supply chains are still disrupted. Rising global instability and growing tensions between major world powers continue to cast shadows over international trade and long-term economic planning. There's unease around debt ceilings, elections, and growing nationalism. But Buffett doesn't buy into surface-level calm. He's not reading headlines, he's reading balance sheets, market sentiment, and risk. And here's the twist. Despite the apparent strength of the economy, he's been quietly unloading stocks for 10 straight quarters. That's over 2 years of consistent net selling. Therefore, the question isn't just what did he sell? It's what does he know that others don't? Why would he step away from the very companies he's praised for years? Buffett doesn't sell lightly. He said it again and again. He buys with the intention of holding forever unless something fundamental changes. And when he does sell, it's usually for one of 4 reasons. He wants to free up cash for a better opportunity. He loses trust in the company's management. He believes the business has lost its competitive edge, or the stock is simply overpriced. So, which of these is driving this historic $133 billion exodus? Let's examine 4 major examples. First, Chevron. Buffett built his Chevron position when energy was out of favor, but by late 2022, the stock had rallied on surging oil prices, and Berkshire began to trim its holdings. Additionally, there may be a forward-looking consideration here. Buffett, while not a vocal advocate for sustainable investing, is well aware of the global shift toward renewables and the uncertain long-term outlook for fossil fuels. Oil may still be profitable now, but it's no longer seen as the dominant growth story for the future. By the end of 2023, the position was down by nearly a third. Therefore, this seems like a textbook case of overvaluation, but also a growing belief that the traditional oil business may lose its competitive edge in the decades ahead. The stock ran up, the upside shrank, and Buffett took profits. It also helped rebalance Berkshire's exposure to energy. Next, Bank of America. Buffett's relationship with Bank of America spans over a decade. It was one of his core financial holdings, but in 2024, he sold about 32% of the stake. The move brought Berkshire's ownership below the 10% threshold, freeing them from banking regulations and reporting requirements. But here's the catch. This wasn't just regulatory maneuvering. With banks facing pressure from high interest rates, sluggish loan demand, and the fallout from regional banking turmoil, Buffett may have seen storm clouds ahead. Consumer debt is rising, savings are thinning, and regional banks remain fragile. Therefore, this could be a mix of reallocation and caution, not a lack of trust in management, but strategic repositioning, a move to reduce risk in a sector that could face significant headwinds. Then we have Apple. Buffett has called Apple a consumer product company with a tech wrapper. It was his crown jewel. At its peak, Apple made up nearly half of Berkshire's equity portfolio. Yet in 2024, Buffett sold a jaw-dropping 67% of his Apple shares. Why? Apple stock had surged, making it a dangerously large position. Valuation was high, limiting future upside. Potential tax changes loomed, and perhaps most importantly, Apple is evolving, increasingly relying on services and digital ecosystems that are harder to forecast and may face regulatory headwinds. Therefore, even though he still loves Apple, Buffett recognized the risk of overexposure. When one stock becomes the elephant in the room, even if it's a great elephant, you sometimes have to let it go. And by doing so, Buffett not only locked in profits but also diversified his risk. And finally, TSMC. Buffett shocked the market when he bought billions in Taiwan Semiconductor, the world's most advanced chip maker, a cornerstone of global tech supplying the brains behind everything from iPhones to AI servers. But just months later, he dumped nearly the entire stake. His reasoning? Geopolitical risk. Despite praising the company's management, Buffett didn't want to bet on peace between China and Taiwan, so he pulled out. Fast, because sometimes even the best businesses can be in the wrong place at the wrong time, and Buffett doesn't like to invest where the risks are unquantifiable. So, what's the common thread here? Buffett isn't panicking, he's preparing. Preparing for what exactly? He's not trying to time the market, he's not shouting crash from the rooftops, but when he sells this much, builds this much cash, and buys almost nothing in return, it means something, and that something could be this. The next great opportunity hasn't arrived yet, but it will. And when it does, Buffett wants to be ready. So, the fortress of cash is not just defensive, it's offensive. It's dry powder waiting for fire. When the market panics, he'll have the flexibility and the capital to move faster than anyone else. In his latest letter, he lamented the casino-like behavior of modern investors. He complained about a lack of compelling deals. He hinted that patience is the rarest commodity on Wall Street today, and he's right. So, while others chase hype, Buffett waits. While others speculate, Buffett watches. And he's made billions doing just that. Every major investment he's made followed a similar pattern: restraint, preparation, then action when others fear. That discipline is what separates Buffett from the crowd. While others chase headlines or trade on emotion, he studies patterns, waits for irrationality, and then strikes with conviction. It's not flashy, but it's made him the most successful investor in history. So, what does this mean for the rest of us? Buffett is not betting on a crash, he is betting on uncertainty. That should give every investor pause, because the biggest takeaway here isn't fear, it's discipline, patience, the willingness to do nothing when nothing makes sense, and the courage to move big when the time is right. We're in a market obsessed with action. Buffett is reminding us that sometimes the best action is no action. So, here's the question: are you chasing or are you preparing? What do you think Buffett is preparing for? Is this just discipline at work or a warning shot for the rest of us? Drop your thoughts in the comments below. Hit that like button and subscribe to the channel.